Today, we're diving into the most recent Berkshire Hathaway shareholders meeting, where none other than Warren Buffett, the Oracle of Omaha himself, took center stage to share his thoughts on the current state of the U.S. banking system. In a world teetering on the edge of financial uncertainty, Buffett praised government intervention for its role in averting a potentially catastrophic banking crisis. However, he didn't shy away from discussing the problems lurking within the system itself, describing it as overly complicated. Buffett's bearish sentiment towards the banking industry was further underlined by his decision to sell bank stocks, a move he began at the onset of the pandemic and has continued over the past 6 months. In today's video, we'll break down the key insights and takeaways from Buffett's discussion, exploring what this could mean for the future of banking and for you, as an investor or interested observer. So, without further ado, let's get started. The Berkshire Hathaway's top gun, Warren Buffett, applauded the government's timely response to the recent banking meltdown, suggesting it thwarted what could have been a more serious crisis. However, he didn't hold back his criticism of the intricate U.S. banking system, stating his lack of surprise at the bank's downfall. Buffett revealed that he had been offloading bank stocks, an action initiated at the pandemic's onset and ramped up over the previous half year due to increasing mismanagement and improper incentives in the banking sector. Buffett pointed out the lack of understanding of the banking system among the American public and even among certain members of Congress, equating their comprehension to his own. He made these comments during Berkshire Hathaway's annual shareholders gathering in Omaha, Nebraska. When discussing Silicon Valley Bank's failure, Buffett expressed his belief that the government's decision to insure bank deposits beyond the Federal Deposit Insurance Corporation's guarantee of $250,000 was the correct course of action. He painted a grim picture of the potential consequences had the government not intervened. Refusing to guarantee all SVB deposits could have triggered a nationwide bank run, putting the entire global financial system in jeopardy, according to Buffett. Berkshire Hathaway, a sprawling Omaha-based conglomerate with a diverse portfolio including everything from Dairy Queen to Geico, holds significant investments in the country's largest banks. As we wrapped up 2022, Buffett's investment portfolio featured a 13% stake in Bank of America, 3.2% in Bank of New York Mellon, 2.8% in Citigroup, and a 0.5% slice of U.S. Bancorp. The banking sector has been shaken to its core by soaring interest rates, putting banks on the ropes that were unprepared for the sudden devaluation of their interest rate-sensitive assets. Buffett expressed his concerns about how effortless it has become to trigger bank runs. He commented, "If people think deposits aren't sticky anymore, you're living in a different era," and pointed out that advancements in technology could cause a bank run in a matter of seconds. A fresh Gallup poll reveals a worrying trend. Nearly half of Americans are anxious about the security of their deposits. This level of concern hasn't been seen since the global financial crash in 2008. Despite the mounting worry over the potential for more bank runs, and sharing a personal anecdote about his father losing his job due to a bank run in 1931, Buffett argued that fears about deposit safety are unwarranted, given the government's actions. Buffett noted, "Here we are in 2023, and we actually see the FDIC pay off 100 cents on the dollar to everybody, or making it available to all demand deposits." The banking crisis has put the spotlight on the commercial real estate sector. With the rise of remote work and skyrocketing borrowing costs, there's growing apprehension around banks that extend loans to this sector. The hollowing out of the downtowns in the United States and elsewhere in the world is going to be quite significant and quite unpleasant, commented Charlie Munger, Berkshire's vice chairman. He assured that Berkshire itself has no active exposure to commercial real estate. Buffett lauded Jay Powell, the chairman of the Federal Reserve, stating that nobody had a better grasp of the current economic climate than him. However, he also sounded a note of caution, emphasizing the constraints of the Fed's control. Buffett expressed concern about the potential consequences of burgeoning price growth and rampant money printing, which he likened to letting the genie out of the bottle, and their impact on confidence in the U.S. dollar. Buffett noted, "We are not as well off in relation to curbing inflation expectations, which become self-fulfilling. We are not as well off as we were earlier." Despite acknowledging the uncertainty surrounding the future loss of purchasing power, Buffett dismissed the notion of the U.S. dollar losing its status as the world's reserve currency. Buffett asserted, "I see no option for any other currency to be the reserve currency." Buffett also touched on the contentious issue of the debt ceiling. He voiced his disbelief that the U.S. government would allow the debt ceiling issue to plunge the world into chaos. With the clock ticking towards a June 1 deadline, the White House and Congress are racing to increase the maximum amount the U.S. Treasury is permitted to borrow. The potentially disastrous economic and financial implications of a government default are hanging in the balance. However, Buffett didn't stop at economic issues. He extended his concern to the overall direction of U.S. politics. Buffett lamented, "Partisanship, it seems to be, has moved toward tribalism, and tribalism just doesn't work as well." The seasoned veterans didn't shy away from discussing the impact of artificial intelligence on investment strategies and the broader world. Street mulls over the potential of tech tools like ChatGPT to predict stock trends. Buffett downplayed its significance, stating, "The tech doesn't make any difference when it comes to spotting worthwhile investment opportunities." Buffett, known far and wide for his knack for picking stocks, which built Berkshire's success, noted that what gives you opportunities is other people doing dumb things. On a broader note, Buffett aired his apprehensions about society's inability to uninvent transformative technology but firmly asserted that humans are still at the helm. In his words, "With AI, it can change everything in the world except how men think and behave." This statement echoes Albert Einstein's sentiments about the creation of the atomic bomb. Meanwhile, Munger added a dash of humor, stating, "Old-fashioned intelligence works pretty well." Warren Buffett currently occupies the 5th spot on Forbes' billionaires list, boasting a staggering net worth of approximately $105 billion. Over his illustrious career spanning multiple decades, Buffett has cemented his status as one of the most astute investors of all time. Interestingly, he has managed to achieve this feat while adhering to a relatively modest lifestyle, residing in the same house he bought back in 1958 and frequently enjoying McDonald's meals. Value investing serves as the cornerstone of Buffett's strategy, which revolves around buying low and only offloading when absolutely necessary. He recommends holding on to sound investments for decades, paying little attention to short-term market fluctuations. Buffett encourages investors to focus on a stock's long-term earnings and dividends as key determinants of a successful investment. In his words, "You'd look at the earnings and dividends over the years as determining whether you made a good investment or not. And that's what people should do with stocks." The yearly Berkshire Shareholders meeting, whimsically referred to by Buffett and his admirers as the Woodstock for capitalists, has drawn up to 40,000 attendees to Omaha, Nebraska's largest convention center. This will be the 59th occasion that Buffett takes the helm at Berkshire's annual shareholder meeting. This event is also famous for its marathon-like Q&A session. Buffett, at 92, and Berkshire Vice Chairman Charlie Munger, at 99, are set to field questions from participants for no less than 5 hours on Saturday. Like many investors, Berkshire had a challenging year, at least in the books, reporting an annual loss of $22.8 billion for 2022. However, in his most recent annual letter to shareholders, a landmark event in itself on investors' calendars, Buffett dismissed this figure as 100% misleading due to it including losses from stock holdings, whose quarter-by-quarter gyrations, regularly and mindlessly headlined by media, totally misinform investors. Buffett urged investors to shift their focus to the operating earnings of Berkshire's diverse portfolio of companies, which, as of the end of the year, encompassed American Express, Bank of America, Coca-Cola, Occidental Petroleum, and Paramount Global. By this measure, Berkshire set a record at $30.8 billion, he said. Furthermore, Buffett estimated that Berkshire shareholders have enjoyed a whopping return rate of 3,787,464% over the corporation's 58-year existence. He credited this phenomenal success to consistent savings, the power of compounding, the evasion of major blunders, and what he termed the American tailwind. In his letter, Buffett stated, "America would have done fine without Berkshire." The reverse is not true. On Saturday, Berkshire reported a 12.6% rise in operating earnings compared to the same period last year. However, Buffett cautioned that an economic downturn would likely result in a majority of our businesses posting lower earnings this year than the previous one. And there you have it. That's a wrap on the key takeaways from the recent Berkshire Hathaway shareholders meeting. That's all for today's video. Don't forget to hit the like button, subscribe to our channel, and hit the notification bell to stay updated with the latest insights from the world of finance. Until next time, stay savvy.